Morning, everybody. How are you all doing? Morning, Danny. How are you? Welcome to the members stream. It's Tuesday. I don't know. I'm looking at my wrist. Just making sure I was on time, but I haven't got my watch on. So anyway, morning. How are you all doing? Anybody else here? Let me know if you are. Say hello in the chat. Right, today, markets just opened. We're going to go through the usual stuff today. We're going to go through the news. We're going to go through what's coming up today, have a look at the positions, zones, usual stuff, trade the DAX and the FTSE. Already long the DAX. FTSE's not gone anywhere yet. We're going to have a quick chat this morning about what happened yesterday in the US indices with NVIDIA and what impact that might have. And then we're going to go into today's sort of topic, which is binary markets, how to easily predict the next price move and manage risk. So this is basically a little bit of a psychological type session, I guess you would call it. But it's just hammering home the fact that markets only go up and down, and kind of getting everybody to understand the ways that it does it. And it makes your life so much easier when you understand the only outcomes you have are up and down. Analysis becomes really easy when you only have to decide on two factors rather than 5 indicators, a moving average, a price action candlestick, blah, 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 all the other crap that goes into all the other systems. It's exactly the same thing as just flipping a coin. So it's all about looking at that and hopefully making it easier for you to set targets, which is what it's mainly about, making money. But more importantly, managing risk as well and understanding where price is likely to go so you can understand what to expect with drawdown. Yeah, so that's what we're going to cover today. So we will kick off with the news. Obviously, today is another no news day. We had no news day yesterday, although the markets obviously went a bit crazy yesterday with what went on with DeepSeek and NVIDIA. But there isn't really anything going on today. 1:30, we've got a bit of news with core durables. We've got consumer confidence at 3, might do something. Morning, Jules. Morning, Leon. Might do something. Doesn't usually, especially when the following day you got FOMC. So it's all about Wednesday this week. Yesterday was an absolute curveball with NVIDIA. So not a lot you can really do about that. I didn't trade it in the afternoon. I did trade it on my Top Step account, and I made $1,200. But I traded the mean reversion on NVIDIA. So NVIDIA had already done way over 200% ADR by the time the market opened yesterday. So we will have a look at that in a minute. Morning, Don. So that's basically today's news. There isn't really anything. Overnight wise, not a lot. A little bit of talk out of Japan. Nothing particularly exciting. Trump here, I want universal tariffs much bigger than 2.5%. As you can see, right, so just to confirm, morning, I have said morning, Don, haven't I? I think so. If not, morning, Don. So just to reconfirm, yeah, what I keep going on about over and over and again with these Trump effects, yeah, Trump effect, yeah, Trump effect. Yeah, it's just a knee-jerk reaction 99% of the time, and it retraces back to where it was. So if you have a look at the euro US dollar, on that little bit of Trump. So yeah, so actually this one hasn't reverted yet. So this is a good mean reversion opportunity today. Yeah. It's just, he's just saying in this statement, and this is the problem, he just comes out and says stuff without telling anybody. I want universal tariffs much bigger than 2.5%. I want a yacht. Yeah, doesn't make it happen, does it? It means that he wants something, but the market will panic immediately, and then it will go, well, yeah, but how, when, why? Let's look into it in more detail. And then they realize that was an absolutely pointless move they just put in, and they just come back to where we were before. So just ignore Trump unless he says something I have done and we weren't expecting it. If that's the case, then yeah, it needs a little bit more looking into. So Chinese startup DeepSeek should be a wake-up call. This is classic, isn't it? Absolute classic. Trump basically changes levies on AI and all sorts of stuff. He writes policies that says he's going to do this, that, and the other. Twice, yes. Morning, Don, again. He says all this stuff, creates a massive move in the market, and then goes, well, you should have been prepared for that, shouldn't you, Nvidia? Hopefully Trump was short on the NASDAQ at the time. But anyway, just utter idiot. Impose tariffs on steel, aluminium, and copper. Yeah. Holy crap, really? Oh, that's all right. Don't worry about it. Trump effect. Yeah, this is meme revert. Everything he says, it's just, unless he says something important, nothing he says is important. Impose tariffs on foreign computer chips soon. Yeah. Holy crap, you just screwed Nvidia. Okay, don't worry, we'll tax China. Knee-jerk reaction. It's just knee-jerk reaction after knee-jerk reaction. That's just what he does. Apart from that, there was no other news. I said there was no news this morning, but there was a hell of a lot of Trump news. But it's not news. It's just blah, blah, blah. Rubbish. Anyway, so that's that done. Markets today, hedged on the DAX, long on the FTSE. Didn't really get much on yesterday. I had a long on the FTSE yesterday, which I took off there for a bit of profit. We were struggling at this. This isn't really the pre-market high on the FTSE because this is all sort of broker data. As you can see, it's just crap. But we struggled basically to make any headway. So I decided to scrap it yesterday. It carried on going, and then it did finally break. So if you did hold it yesterday, that was 3R, that was 5R. So if you did hold yesterday's FTSE break, you did get paid on both, although that was less than 94. Yeah, so you probably would have got the 3 and the 5 yesterday if you'd have held it. I didn't. But the DAX yesterday was way too much movement pre-market, so didn't get one on that. So looking at the DAX hedge today, our upside is perfect. 5R is high of the week. That's perfect. Downside, it's really difficult to tell because of obviously what happened yesterday with Nvidia. They upset the entire market. So that V-shaped recovery yesterday, I'd be very surprised if that's the pullback. I would look for us to try and attempt those lows again at some point, but downside target, very hard to pick today on the DAX. I think I'm just going to leave it at 5R for the minute and monitor it. Nothing much we can do with that DAX today. It's whipsaw open, long on the FTSE. Right, so FX wise, I did post in Discord a minute ago. Closed out Euro Pound this morning. Exposure's really low. These ADRs are not hitting at the minute. RSIs rather. There's just very few entries at the minute. So out of Euro Pound today, that one obviously was from beginning of January. 3 entries out, done, dusted. So that's nice and easy. There's potential more downside on this. I get the feeling we may well come all the way back here, but I'm not greedy. I take the money when it's there. It's just under 1% on the table, so that's been taken. So 14% month. I've got virtually no drawdown. I'm swapping my money about a bit at the moment. So what I've done is I've set up another trading account which I'm trading ADR reversals on separately, and this is going to be H1 mean reversion, RSI mean reversion only. So I've split my capital now out into 4 accounts for diversification purposes. So on the VPS, I now have this account, which is H1 RSI mean reversion. So I've transferred some extra capital into this one, and then I will close the other account and draw all that money out of that account. So this one is basically going to be trading H1 mean reversion, RSI. This one is going to be trading M15 ADR reversals. Did 200 on that yesterday on the Swiss franc moves. It's New Zealand. I've got the Aussie on as well, haven't I? Let's go close that one out. just don't want double exposure on the Aussie and the New Zealand against the Swissy. So yeah, so this one's going to be trading ADR reversals. This is obviously the Zone Trader account. Again, another 1.7 bank, 17% nearly this month I've done on that. 2% drawdown. Phenomenal. Morning, Mark. This is it's really nice and refreshing to go back to the way I used to trade. This is how it all started. Before the reversal indicator, this is how it all started. I was just trading support resistance, but not using stops. This is how I got into position trading, going back to my basics, and making a hell of a lot more money doing it as well. But January's been pretty good, isn't it? No squeezes in January. So yeah, I'm going to be running that account, and I've also got the trend pullback account running, which is back up to capital. 25k is what we started with. Back up to 25, so obviously had a bit of drawdown on it, and it's popped back up again. So that's how I've split my capital at the moment out into those 4. So I've got 3 position trading strategies running, 1 stop loss based strategy, and I'm going to be adding a new stop loss based strategy in. And obviously I've got the indices. So just I've spent most of January just trying to get prepared, and finally got there. End of January, and now I'm there. So anyway, that's done. So open positions at the moment, Aussie, New Zealand, extended. It's coming down nicely. I hopefully will be out of that today. It'd be nice to close all this out in the next 2 days. So I'm flat on this account by January and I can get the cash out, or rather stick it into the wallet. So looking for a push down into the lows, basically. Retesting that low from yesterday, although that is a Monday broker candle. So my target on this is 39. Which is beyond that low. Okay, so I'm just going to put some manual TPs on this. I'm not confident enough to hold all the way down to TP on this. So I'm going to go what have we got news-wise tomorrow? Aussie, pound, Bailey. Yeah, I'm just going to stick the TPs down there. Just I just want to try and get flat on the account, really, to be honest. So there we go. So previous week's low. So this is last week's low and previous week's low. Obviously lower the range, basically. So I'm expecting, unless something dramatic happens, to stay within this range until we have something, and we have actually got something. It's the Aussie. This is the thing. CPI tomorrow morning. I'd like to be out of this by CPI, because if CPI goes that way, which it is actually forecast to do, this is going to turn into just a pain in the backside. So I'd kind of like to be out of this today. So if we do get an ADR hit today on that, I'll be flat on it. And then I've got Euro CAD on. That's the only other thing at the minute. So 3 shorts. It's just grinding away to the upside. We've come down nicely. We've got the Canadian interest rates obviously tomorrow, and they're forecast to be dropping interest rates. So it's likely to do that. But then we've got the Euro dropping interest rates, which is likely to do that. So it's going to go one way or the other tomorrow. So this is the only thing I'm holding. Hopefully we'll get out of that. But ADRs and RSIs, there's no ADRs today. There's no weekly ranges hit so far. Euro US dollar, pound odd rather, is the only thing we've got really extended at the moment on that 4 hour, which is what I got out of. And it's still up there. Look, it's embedded. We have now got divergence on the 4 hour RSI, sorry, on the hourly RSI, that is. So back at the 4. We have actually got divergence, I think, on the 4 forming as well. So it's starting to get divergent. So, you know, we should pull back into the high of that range and test that propulsion gap at some point, I think. Worst case scenario, I think we should be testing that propulsion gap there. But obviously shorting this is very expensive, so it's up to you if you want to take it. But that's the only RSI extension, really extended. Good for a scalp short. You know, when you get up to these levels, even if it doesn't mean revert, yeah. Where are we there? Yeah. You should get a pullback of some kind, and this is what we're going to look at today in the session. You've also got Euro Pound extended. just got out of that, obviously, so that's extended to the downside on the 4 hour, so exited because expecting a bounce. However, I think there's a good chance that we might pull back a bit further on this one, but obviously euro rates coming out this week, so we'll find out then. And pound New Zealand, which I can't trade because it's too expensive, it's extended to the upside. So yeah, coming up into that big propulsion gap, which they've resold. So potential short opportunity there. There we go. So that's all those. So I'm going to whiz through the zones this morning. And we'll have a look at those. Shout if you've got any questions as we go. I should be banking some more today, hopefully. So let me just have a drink. Start at the beginning. Aussie dollar CAD. So I'm just going to whiz through these again because I do them every day. So anything that's already set up, if you want to know about it, go look at yesterday. I'm not going to explain every one again in detail because otherwise we'll be here forever. But yeah, nothing to do there. I'm short. It's in profit. I'm waiting for it to drop. Aussie dollar Swiss exited yesterday on the short positions. That was a 4-trade short out of that on that Swiss franc rally on the back of Nvidia, which we'll talk about in a minute. Flip long. Yeah, so I want to be long on this because obviously it's paying me to go long. It's expensive to go short. So that was an old short that was taken. But so long only. Next entry. So we got this area here. These highs, which is basically what we've come and tapped back into. So what I'm looking at is this forming an area of resistance, which we broke through. It was flip-flopping around, not particularly useful as a level. Then it broke out. Then it used that level as support. And then it came back and retested this level and they rebought. So this is the breakout here. And this is them rebuying that breakout. So on the way down, if we are going to continue down, I will rebuy the same level as they bought before. And if not, we'll come down into those lows. Yeah. And then highs basically target to the upside. Got gap fill there. So we'll go for that. Aussie New Zealand. I'm short, waiting for it to do something, not doing anything, so waiting for that to come down. Out of the short on the Aussie US, automatically flipped long. Second entry needed on this one. Target to the upside. Again, all these US at the minute, I just want to try and get in and out and scalp as fast as I can out of them. So I'm not looking for massive targets. So took a little short yesterday, got out, flipped long. Next upward movement, I'm expecting from somewhere in that area there. Yeah, so we got this area here. We kept rejecting that area over and over again, slammed through it. Then we used it as support. So everybody that was trying to short this level got run over and they flipped long with everybody that broke the highs. Now this is the next area we should find them buying from again. So that's the next long. CAD Swiss. Second entry long taken, so I need a new one on this. This is back in profit. Next buy. Oh, it's a bit of a mess down here, isn't it? It's quite far, that 42. I need my ADR indicator. Don't like that. I'd rather go, I think. Oh, this is tricky. This is a bit close. It's not really an obvious area here. I'm just going to go with the lows, basically. This one, basically, when you're using zones, or rather when you're looking at positions and scaling into positions, the further apart your positions are, the further away you have to have price move to get back to your average, basically. So I'm always, this is why I use roughly half an ADR, 3/4 of an ADR as a measurement, because the market will move half to 3/4 of an ADR pretty much every day of the week. 58% of the time it stays within ADR. So you can be assured that if you've got something that's happening somewhere between a half to 3/4 of an ADR, most of the time it'll do it. When you start going to the levels which are that big, which is going to be roughly 1 1/4 ADR away, it means that the average price moves down so much slower, meaning that you need a much stronger movement to get you back there. So this is the reason between keeping the entries fairly close but not too far apart, and also not too close, because otherwise you get too much risk on, and in a squeeze you're going to get really hurt. So it's a Goldilocks zone of around about half to 3/4 ADR. This is a very tricky one, because that is half an ADR from that entry. There's that little bit there, but there's just nothing there that says this is a decent level. There's those wicks there and that bit there, but it's just a mess before it. It's a mess above it. It's a mess during it. It's just a messy area. So that would be a good level. That is a much better level, and we're likely to get a much bigger bounce off the bottom there, but it's going to take a lot longer to get out the position. So it's one of those where you have to look at it and go, it's just, if it doesn't work out, it's going to take a while to get out of. Obviously, this is a V-shaped recovery on the Nvidia move, which was a safe haven run yesterday. So it is in profit at the moment. Upside target on this, I'm going to move down and look at these highs, basically. So this is the area basically after that big strong news spike that we resold over and over and over again. We've got the gap fill there. So there's potential for that gap fill to be a move down, but there's also potential for it to come up and retest that area after the gap fill. The Swiss came out yesterday and re-announced the fact that they are going to look at negative interest rates. They don't want to do it, but they will do it if necessary. That was all came out yesterday in the news. So it's going to be negative Swiss. So that's the move if we get negative Swiss. The Canadians are looking to drop interest rates. So that's the move if they drop in interest rates. So it's a very difficult pair to trade at the moment. And this is why we're getting this sort of price action, because there's bearish news coming on everything at the moment. So I'm just going to leave it where it is. Euro odd shorts, need new sell. Second entry taken, third entry simple, up at the highs. Target to the downside, bottom of the range. It's going to move that up so it encompasses these lows as well. New short needed on Euro CAD. Very simple, high the range. So downside target, now we've taken another position. Average has moved up, which means I can move my target up. So this area here, where I got out of that short, that high, is a retest area. So it's roughly that area there. So that's what I'm going to look at for a downside target. So it's this area here, which we hit, rejected, slammed through it, came back and rebought. So this area here is where they were buying and selling. Euro Swiss, no trades on. Looking for a long. Now, yesterday I had a long entry on this. I had a zone on this yesterday, going back and look at the live room, roughly at this area, which we got the bounce at. So I would be long on this now. But I can't short it because it's too expensive. So this is exactly where I was expecting the bounce to happen. But that move there yesterday scared me, because obviously when you get a safe haven run, and I didn't know what was going on, I didn't know why it was going on yesterday at the time. When you get a safe haven run starting, they can be huge, because until you know what is causing it, you don't know how big it's going to be. Well, it turned out obviously to be just everybody panicking and selling Nvidia stock, which was driving money into safe haven, because basically if you've got to sell all your Nvidia and you don't know where to put it, you put it in storage, yen, Swiss. That's why they had the rally yesterday. Now I think the market is probably going, actually, is it as bad as we thought? It is just a free website offering the same thing as OpenAI. Does it really affect Nvidia's chip sales, in AI chip sales? Probably not. Probably going to recover. So it is still a good place to get in, but right now I haven't really got anything logical I want to do. If they come down and test that low again, I'll buy it again. If they don't, I will wait and see what happens when we get up there, and then I'll maybe look for a pullback. But obviously we've got that as a play. So if you wanted to, you could sort of put the zone somewhere like that and just get in long. Yeah, but I'm going to leave that as a low entry. Euro pound is coming down nicely. Exit target is the symmetrical triangle, same as yesterday. Euro New Zealand, nothing's moved. Euro US dollar, Nothing has moved, so just still short. It's going short. Pound odd exited yesterday on the pound odd. In there, I am looking for longs only, just about 460 swap on this now. It's getting expensive. It's going to go the way of the pound New Zealand, and I won't be trading it anymore. So long entries, I need to look for new setup on this. So long entry to the downside. Got two areas. We're either looking for a retest of this 4-hour propulsion gap here. So these 4 candles, if you look at that on a 4-hour time frame, that is a massive propulsion gap there. So we're either going to test that and rally, or there is potential for us to pull back weaker into this area of balance here, this kind of accumulation before we broke there. It kind of came back and retested that wick already, just about, and they rebought it. So it's a very strong move at the moment on the pound. So I'm looking for something to drive it much further down to sort of get in on that springboard, on that break. So obviously those highs that we've just broken out of is the logical spot. So if we can get down there, I'll long that area. Other than that, I'm not really interested in at the minute. Pound CAD, same thing. Yeah. Accumulation break, massive propulsion gap. Let's fill that propulsion gap and go long. Pound Swiss, same thing. Didn't quite get to my entry on it yesterday. I was looking for these highs to get tested. We didn't get there. We fell short and put a new higher low in. So at the minute, I'm just going to let that go, see if it pushes up today, and then I'll look for maybe an entry, pull back in that area or something. I don't know. I won't see what it does. See what it paints. Short pound US dollar, still in it. New Zealand CAD, still in it. Short. New Zealand Swiss, new long taken. So I need a new long entry. Lows. So we've got all these lows down here, lots of them. Oh. There. So if it gets down to there, I'll rebuy that and hope that's going to form a, this is the area of balance. Got a little area of balance there, breakout. If it's a false breakout, we're going to come back down and retest these lows. And then we might get a false breakout there before we come back up. Otherwise, what we're going to do is we're going to go. Yeah. So we've hit those highs. We've broken out of those highs. So if market structure is going long, we're going to do that. If this is a false breakout, we're going to do that. Part of what we're going to cover today. Yeah. New Zealand US shorts, nothing's changed. US dollar CAD, nothing's changed. US dollar Swiss out of the shorts, flipped long. Next entry long. So I got out of this yesterday. I posted in the Zone Trader channel. Flip long. Yeah, let's see if we can get a rally on the US. If not, we're going to come down and test these lows. Yeah, so that's the next logical area for retest below the entry. And that's it. Done. Right, let's see how the easy indices are getting on. FTSE stuck. I've got to change broker or stop trading the FTSE. This spread is unbelievable on the FTSE. It's got so much bigger than it used to be, I'm sure. I don't remember looking at it going, holy crap, that's a massive spread. And now I do. So I need to do something about this because it's too big. I'm going to have a look at swapping brokers again. DAX broken to the downside. So it looks like we're off to target. So this downside target at 5R today on the DAX isn't actually too bad. It's an accumulation break. So they may come and retest this area and bounce from there, retest that propulsion move and rebuy this level. If they don't, they've got to break through to ADR. So it's not actually a bad level down here. That's kind of the wiggle room we might get before we get an aggressive entry on. But we'll see where that goes. At the minute, obviously, this is looking like it's trying to break. And if it does break out the highs, the FTSE, and we get up to here, we're going to pay for the hedge anyway, so it doesn't matter. So as long as we got that clean break and that clean break works, it pays for the hedge and makes money. That's the whole point of the portfolio approach. Right, there we go. Any questions on any of that? Let me know. I need to post that in the group. Leave it open to remind me. Right, so today, that's what we're talking about basically. So binary markets, what's the time? 8:30, so half an hour in, we're starting the session. So binary markets, how to easily predict the next price move and manage risk. So when you're trading, obviously what we're looking to do is make money, which is obvious thing. So the only way you can make money in any market is basically to get the direction right. Yeah, that's what it's all about. So what traders tend to spend their entire life doing is basically trying to predict the direction of price based on repeating things that have happened in the past. Yeah, so W pattern reversals that happen, M pattern reversals that happen, a moving average crossing over another moving average happening. Yeah, but these are all happening because of random price action and will happen all the time. You're going to see them everywhere, and they will either work and you make money, or they will fail and you will lose money. That's the normal way of trading, isn't it? Yeah. So every single one of the signals you receive from any system, any strategy, any guru, any signal service that you see out there, whatever it may be, whatever you're doing, the only thing that you can do as a trader is press two buttons, which is buy and sell. Yeah, this is the binary market. All markets are exactly the same. It doesn't matter what you're looking at. If you look at the pound New Zealand, yeah, and you look at the pound yen, and you look at gold, yeah, what are they all doing? Going down and going up, because that's all they can do. Price moves down and it moves up and it moves through time. That's all there is. So as a trader, your job is to press a button, a binary button, yeah, to go long or short. And then you wrap risk around that entry. So if you're using a traditional stop loss, you're going to press the button to go short on that reversal alert, for example, which is really small that you probably can't see. And then you're going to apply some risk to that trade. So you're pressing a button, the binary button, which is short, and then you're applying a risk to it and saying, if it goes up to there, I'm going to lose X. And if it goes down, I'm going to make Y. Yeah, that's trading. Yeah, at the end of the day. As position traders, we eliminate that part, which means that if it goes down, we make money. If it goes up, we change the price and we wait for it to go down. Yeah, because that's all it can do. So from a position trader perspective, your focus, your job is not to try and find a system or a strategy that is very, very accurate. Your job is to press a button. Either you're going to press that button or that button. Yep, you're going to buy it or you're going to sell it. And then your job, as soon as you've pressed that button, is to say, where is it going next? Yeah. And it doesn't matter what direction it goes, because you cannot control the direction. The direction is controlled by the market participants that can move the market: banks, institutional traders, hedge funds, pension funds. We can't move it. So we have to be on it. All we're doing is we're riding with the banks. So your job basically is not to get the best entry. Your job is to enter. That's it. So whatever your bias is, so I know some people trade exactly the way that I do, using RSI and mean reversion. Some people use the ADR. Some people are using some other strategy to press a button and then just turning that into a position trading strategy. Some people are using moving averages. Some people are using fundamentals. It doesn't matter what you use, does it? At the end of the day, if you get in because the fundamentals say that the interest rates are going up and then the bank comes out and says, actually, we're not going to, you're wrong. So you have a decision to make, binary, and it's either right or it's wrong. That's it at the end of the day. That's the bit you've got to accept. But the next thing, the most important skill in trading, is identifying where price is going next. Because if you can't identify where it's going, you can't plan to get out of your trade. When you're in a trade as a stop loss trader, you have a fixed exit. And that exit, whether it gets hit or not, is down to the market, but it is finite. When you're a position trader, you haven't got that. So when you go short, you have an infinite drawdown and an infinite profit possibility. Yeah. So the important thing is to identify where you are going to get out of the market. And as the market only does two things, goes up and down, it's really simple for you to identify where your targets are going to be, because all you're going to do is you're going to pick a target up and you're going to pick a target down. And depending on which of the binary buttons you've pressed, that will either be, let's say we've gone long here, that will either be a new buy order or it will be a sell order to take the money off the table and put it in your P&L. Yeah, that's it. If you simplify trading down to its core parts, this is what it consists of: pressing a button and then pressing the button again. And whether you need to press the button again will depend on whether you've taken more than one long or whether you've taken one long and one short. That's it. That's all there is. So for identifying levels, you have to think binary. Yeah. So with every chart I look at, the reason I decided to do this session is because somebody said to me, you go in the live room every day and I watch you open up charts and just go, well, price is going either down to here or it's going up to here. And the question was, how do you know it's going up to there or down to there? And to me, that was really obvious. But it occurred to me that it's probably not that obvious if you're new to trading, or if you've been in trading for a while and you just are, and as most people do, get stuck in that cycle of system hopping to try and find something that just works, until you realize that that's not going to work because they all do the same thing. They press a button to go up or down. You don't realize that your job is actually just to identify where it's going. And it was obvious to me. It was like, well, what do you mean? How do I say it's going there or there? Where else can it go? And then I thought, well, obviously he doesn't understand that it can only go there or there. Yeah. But it's not a case of saying it can only go there. What I'm not saying that this is a better chart. This one's a bit of a mess, isn't it? So let's pick let's pick something a bit easier. There we go. Something like the EuroCAD, right? So I'm not saying what is going to happen. I'm saying where it's going to go. Now, when it gets to its destination, I don't care what happens. And this is the thing that I want you to sort of take away from this session. Your job as a trader is to make money, yeah, or to be in a position that puts you in a situation that can make money. So right now on this one, I am short, yeah, and I'm wrong. I'm really wrong. I got in here, I was wrong. I got in here, I was wrong. I got in here, I was wrong. I got in here, I'm still wrong, right? If I'm going to remain wrong, I'm going to get in here, yeah? If I'm going to be right, I'm going to get out here. But what I'm doing is I'm not caring what happens when we get there. What I'm looking for is, we know that price, when it gets to a level, will do one of two things. It's binary, yeah? So when you see a resistance, price will get to that resistance and will do one of two things. There is only two things it can do, which are bounce or not bounce. Yeah, I don't care what it does when it gets there. My job is to do something at a level. I need to decide where to do something. So for me, this is where they previously got to and couldn't get through. They tried to get through again and couldn't get through. They tried to get through again and couldn't get through again, and then they gave up. So to me, it's obvious and logical that, because I've seen it happen over and over again, price, when it gets to levels, it continuously does the same thing until it can't. But I don't care what it does. What I need to do is react there. Yeah. So it's all about finding the levels in the future to do something. The outcome is irrelevant. It's going to go up or down, and you need to accept that. I accept every time we get a trade on, it's either going to be the trade that makes me the money or the trade that doesn't make me the money. If it's not the trade that makes me the money, I will move my price. If it is the trade that makes me the money, I will make the money. Simple as that. So all we're doing is we're looking for where price is going to a bounce point. When that gets there, there's two things going to happen. I am going to take another trade. My average price is going to jump up. It is going to retrace, and I am going to get out with profit. Or it is going to go up to that level. It's going to do something like this, maybe, and then it's going to break that level. And then I'm going to zoom out, and I'm going to say, okay, that didn't work out. I'm going to go up to here. And that's all it is about. Trading is looking at where price is going to react. It cannot go parabolic for a unlimited amount of time. The market cannot sustain it because the market has to take profit. So your job is to not care when the market is going to take profit. It's just to know that the market is going to take profit, because it always does, it always has done. And unless the world is going to blow up and no one's going to spend money anymore, it always will do, because the only way people can spend money is by making money. Banks are the economic driving force of the world that makes money. That's what they do. Their job is to make money, is to use money to make money. So as long as they do that, they have to take profit on the positions they create. That is, at the moment, the area that the market wants to trade in, until it doesn't want to trade in there anymore. And then it goes down, and then it comes back and says, no, don't you remember, we can't trade here anymore, we're going to trade down there. Your job is literally just to identify those levels and wait. That's it. Now, whether you take a 3-bar reversal there, whether you take a moving average cross there, whether you enter with a limit order there as soon as it gets there, whether you want it to blow through that level and be an ICT stop run and whatever, whether you want a break in strip, whatever, I don't care what you want there. When you get there, what you're going to do is you're going to sell it. So your job is simple. It's binary. It's either going to work when it gets there, or it's not going to work when it gets there. If it doesn't work, you wait for the next level and understand that the market has moved so far to get there, it's absolutely exhausted. It can get more exhausted and more exhausted, and it can be as exhausted as it likes, but at some point it's going to get so exhausted it just collapses. Every single time. Go and look at any chart, any time frame, and look back in history. Your job is not to get it right. Your job is to wait. Wait for the market to just do what it does, which is go up and down, because it cannot do anything else. And it's the most important thing that every trader needs to understand, and no trader wants to spend any time learning, because they want the indicator, they want the strategy, they want the money management, they want the psychology, they want everything that doesn't make this thing move. None of it makes it move. It moves at random in 2 directions. So that's all you've got to do. So it kind of comes back to the Zone Trader EA, and why I built this originally was in the live rooms, in the members streams. We wanted a tool. I wanted a tool to teach people how this works so you could use it in a strategy tester. And then I was like, well, this is brilliant. Everybody loves it. I love it. I'm going to use it. So it became a product. But it's the same thing. It's just about drawing boxes. Yeah. And 1 or 2 things is going to happen, because there is only 2 things that can happen, that or that. So when I flip long on an exit, which is, we just had one, haven't we? What was it? Which was the one that just exited yesterday? That short, wasn't it? Aussie US. Yeah. So this came down to an area that I thought it was going to bounce at. There. Okay. So when it got to that area, we had a rejection. So I got out of the short, because what I thought was going to happen was 1 of 2 things. Binary. It's either going to do that or it wasn't. If it wasn't, I got a plan. Yeah. Plan B. Yeah. Plan C is there. Right. Plan A is that. That's it. Plan. So all you've got to do with trading is plan for the next outcome in a binary direction. So where is it going if it goes up? Where is it going if it goes down? There's a million ways to identify levels. Every single one of them is discretionary, but that is your job basically. Now, whether you want to wrap risk around it and take a hard stop loss is up to you. So this trade here, for example, this is about understanding how the market moves and why it moves, the binary aspect of it, rather than risk reward ratios and all that stuff. But if you went long here with a long trade, yeah, your stop loss is going to be under the lows here. Yeah, because you're looking for it to bounce out of this level. And if it doesn't bounce out this level, you're going to exit. But what do you do then? Flip short? Then what happens if it does that? And you just had the level wrong. The actual bounce point was here. This is why people get stopped out all the time. Doesn't work, does it? Because you can't predict where the market's going to bounce, because we haven't got a crystal ball. So what we do know is when it gets here, it's either going long or short. So what we do is we take that buy, and if you want to wrap risk around it, that's where your stop loss goes. Your reward is huge. Yeah. Don't change your upside target. There's actually another one there, isn't there? There's a gap fill retest. So they're definitely selling that area. So upside, I'll be looking maybe for that area or that area, one or the other. TP1, TP2 if you like. Yeah. So that's basically what you've got to do is literally decide on a binary direction. When you get to a level, there's 3 possible outcomes. Okay. So the first part is hit the button for a reason. Yeah. Like I said, your dog throws up in the left-hand corner of the room, you buy it. Your dog throws up in the right-hand corner of the room, you sell it. I've got a poorly dog at the moment. That's the only reason I'm using that. But yeah, basically, it doesn't matter why you press the button. What matters is, you've got a backup plan and an exit. In this case, that's my exit, that's my backup plan. If I was going short, that would be my exit, and that would be my backup plan. It doesn't matter, does it? What I'm just identifying is where we're going. And if you continuously do that, one of 3 things is going to happen every time you get to a level. The market can only do 3 things. So when you get here, it is either going to bounce to a point where I can exit a trade. It's going to bounce and not get to a point where I can exit a trade, accumulate, balance, range, whatever you want to call it. It's going to go, I'm not quite sure yet. Oh, now I am. Yeah. If I wanted it to do that, wrong. But it will get there and it will do that. Or it will get to your area and it will go, screw you, a news event's happened. I'm off. And it will blow through it. Yep. So those are the 3 outcomes. So what you need to do every time you get to a point is identify what has happened. Is it going my way? Excellent. If not, plan B, plan A. Yeah. So all you're doing is you're reassessing the market every time a level is reached based on what it does. So let's say into the future we do this. Let me just expand that zone so we can see. There we go. So when we get down to this area, it's either going to do a nice bounce like this, doing, and come out. Happy days, I'm long, everything's working, I'm my average here, I can get out now here, so I move that zone down to there, tick, done. Or it's going to get there and go, I really am not sure whether or not I've got enough to do this, so we'll sit around and we'll wait and see who comes in with the next big order or the next news event. Yeah, and then as soon as it gets there and that order is placed, my job now is next part of my plan is adjusting levels, adjusting targets. That's it. So understanding how the market moves with market structure is key, and understanding that you only have 2 choices to make is key. So it's either going to do that and do what you want, or it's going to do that and not do what you want. That's it. But everything, every level, every decision made in trading is binary. There is only 2 outcomes to it. So everybody tries to overcomplicate. What I'm saying is to simplify. Go back to the basics of everything. You don't even need a candlestick chart. If candlesticks, and again, somebody mentioned to me the other day about Renko, and they found this Renko strategy, which was, it looks all Renko looks great on paper. It never is. I've tried Renko so many times, it just doesn't work. But if candlesticks don't float your boat, flick your chart over to a line, yeah, and look at it. It's exactly the same. Yeah, price is what we're looking at. We're looking at the prices. The prices, it's actually clearer and easier to see. A lot of people use line, banks use line charts. Actually, they use area charts. But you know, it's all the same stuff, isn't it? Price got up to here, and it got up to here. Yeah, it's the same area it got up to, and it reacted at, and it's the same area there it got to, reacted at. It's the same area here it got to and it reacted at. There's a little bit there where it's reacted at a couple of times. So it doesn't matter which one you pick, because when it gets to it, the outcome is binary. It either will or it won't. Doesn't matter. So if it doesn't, you wait. If it does, you do. That's it. Simple as that. The Renko chart guy said, I've got this amazing system with Renkos. It's basically, instead of using the normal Renko, it was a is it 200? 200 or a 500? I don't know, because I was talking to him about all the different types of Renko blocks. But Renko blocks, basically, Renko charts of that. if you're not familiar with Renko, it's basically what it does is every X number of ticks up here, it draws a block. So it's basically, I've moved up 200 ticks, therefore I'm going to draw a green candle. I've moved up another 200 ticks, here's another green candle. I've moved up another 200 ticks, here's another green candle. Oh, hang on, I've moved down 200 ticks, here's a red candle. And basically he was, all you got to do, and I've done this strategy many times, is wait for that pattern. Because what is that? A reversal alert at a level of interest. But it's blocks, so it's like playing with Duplo. It's trading with Duplo, that's what I used to call it. And I pointed out that what he's actually done is convert the candlestick strategy that he's been trading with my market reversal alerts indicator into the Renko market reversal alerts strategy. What's the difference? You're still going to put your stop there. Yeah. So if you're using reversal alert with candlesticks, you're still going to put your stop there. If you're using Renko blocks, you're still going to put your stop in the same place. You're trading the same strategy. He spent weeks investing time into the same strategy with a different block on the chart. It just hasn't got wicks. It's the same thing. The odds of that Renko block pattern working are 50-50. It's binary. So if you press the button when you see my market reversal alerts indicator signal to go short, you do the same thing as if you see your Renko chart. Do the long or the short, basically. You put a stop loss in the market, you lose money. So it's the same thing, yeah? So that's kind of all I wanted to cover in that session, apart from the fact that identifying market structure is kind of all I'm doing, if you think about it, with binary movement. So market structure is, for me, the only thing that works. Because if you understand market structure and how it works, you understand where price is going. Yeah. So when it makes a new high and a new low and a new high, and it doesn't make a higher low, it makes a lower low, we understand now that the structure is expected to do that. So for me, this is one of the most important things to understand and learn, because this forms the binary movement of price. This is going up. It's a long at the moment. It's just flipped to a short because of that break to the downside. So when you're looking up now for things, you don't want to go above there, because if this is a structure break short, it's going to go like that. So this is where you want to be targeting to the upside, isn't it? To get out. Yeah. But equally, it could continue to go down further, in which case then we're looking for that to become a long. So all you're looking at every time you look at a chart, and every time I look at a chart, is I'm looking for the two outcomes, because there are only two. And this is the key takeaway. Boil it down to two outcomes. It's either going to be a pullback on a long, which means it will break that high, or it's a reversal, which will pull back and make a low down there. Those are the two things that are going to happen. I can guarantee with 100% accuracy that low or that high will be broken, because at some point in the future that has to happen. So your defined risk area is that. That's it. This is what we're working with. We will be out of this trade within this zone, because if it keeps pushing down there, it will be so exhausted by the time it gets there, it needs to pull back. So we will be getting out on that. If it just pushes up to there, I'll be getting out on that. Although I could wait and assume that that 50% pullback is going to go longer and make even more money. But I'm also going to assume that it is going to bounce from there again. Yeah. And this is what you're doing all the time, is you're just making sure that you're always in the market with a direction. Because if you're not in with the market with a direction, you can't make money. And the job is to make money. Your job as a trader is to take on risk. Yeah. It's not to get it right. It's to risk an amount of money to make an amount of money. You don't know which way it's going. So therefore, strategy becomes irrelevant to a certain degree. Obviously, if you can get me something that is more accurate than something that isn't. If you just flip a coin and go long, let's find something that's really, really moving. We've got a moment. Yen's moving, isn't it? Or was. It's not really, is it? there you go. So, you know, if you flip a coin, right, and it comes out heads there, you're probably an idiot. Yeah, I mean, it's gone up for 1, 2, 3, 4, 5, 6, 7, 8 days pretty much straight. Yeah, if you're buying something that's gone up for 8 days, you've missed it. It's late. It's coming down again, isn't it? Obviously, because it's got to, because the market's got to take profit. But you know, it doesn't really matter if I went long there. I know what's going to happen. It's going to come down and it's going to either accumulate or bounce at the previous support. And if that doesn't hold, it's going to have a reaction, in this case, accumulate at the next support. And then it's going to find the next support and it's going to either accumulate or bounce there, or it's not. Then it's going to find the next support and it's either going to accumulate or bounce there, or it's not. And then it's going to find the next support and it's either going to accumulate or it's going to bounce there. If it hasn't, it's absolutely exhausted. The banks are sitting on billions and billions in profits. If they're going to actually realize that profit so they can pay their shareholders, they're going to move it back up again. Where would they move it from? Where they bought it from last time. Yeah. So your job is not to be accurate. Your job is to identify where price is going. There's two places. Absolute worst case scenarios. It's just going to move around in between that. And it's going to take days. It's going to take weeks. It's going to take however long it takes. This one's taken since the 9th of January. But it doesn't matter, does it? Because we're not using risk that is going to kill us if we're wrong. We're expecting to be wrong. I'm not expecting any trade I get into ever to just go in, out. And if it does, I'm like, whoo, look at that. Because price does not move far enough in a day to pay you on small risk. If you get in with 1% risk, yeah, if it moves half an ADR, take the bloody thing, because there's a massive problem if it goes the wrong way, isn't it? But unless you know it's going the right way, you can't do that, can you? So you have to use small risk, which is what every bank and institution does. It puts tiny amounts of money in, and it puts tiny amounts of money in, and it builds a position over time, and it waits for the market to move back in its direction. Admittedly, they can maneuver the market, but it doesn't matter, because if they're doing that and we do that, we can't lose. You will lose, obviously, because they can do it longer than we can, because they've got unlimited pots of cash. We haven't. But, you know, that's the theory. So just try and focus on everything you see. Every time you come across a system or a strategy that looks good on paper, boil it down to the core elements of the system or strategy. What is it doing? Why is it doing it? Yeah, it's entering at random based on a squiggly line or a box or an arrow appearing or an indicator pinging at you. Yeah. Every system and strategy does that. Mine does that. I need the relative strength index to be down. I need some kind of bullish price action, which is a moving average, a reverse alert, whatever it may be. Yeah, that isn't why I make money. That's a thing that I've identified that generates money eventually. It gets me onto the risk ladder. That's it. Now I'm in and I'm waiting. That's all I'm doing. So look at every system or strategy you've ever looked at or you've found, and boil it down to the binary element of it. What is it doing when it gets in? Has it got a plan that looks like it can make money long term? And why is that plan going to work? Yeah. And then all it is about is, whenever you find any strategy, it's about looking at, does it fit what market movement does? If it's using tiny little stop losses like that, you know it's not going to work. Best case scenario, it might get a 50-50 strike rate, but it probably won't. And it will have periods where it does that. And the reason it does it is because it's trying to pick the top and the bottom. If it's not using a level of logical that makes logical sense at the time of entry, it can't plan for what it's going to do next. If it just picks at random, this is why grid trading systems don't work. People have asked me before about this grid trading. Why are you grid trading? I'm not grid trading, I'm position trading. Grid trading is where you get in and you set levels like this that are all the same distance apart, and you enter a new trade at every level. So look at strategies when you come across them. Is it grid trading? If it is, blow it away. Why? Because there is absolutely no reason for any of these levels to turn. There is a reason for this to turn. It did. Yeah, it didn't in the end. And it did in the end. But roughly somewhere where it got exhausted last time, it got exhausted again, and it will continue to do that. When it gets down to this level here, it will react. When it gets down to this level here in the future, it will react. And it reacts because it did before. Because price can only move an infinite amount of distance before the binary force of nature, which is taking profit by banks, forces the opposite to happen, because those are the only two things that can happen. Your variable that you are using to make money is time. The variable they are using is movement in price. That isn't a variable we can control. This is a variable that we can sit through. That's it. So there you go. I think that's it. That's all I wanted to cover. That's all come out of my brain. I didn't write anything down for that. But that's basically it. So hopefully, I mean, the guy that actually asked the question, he isn't a member, so he won't see this ever unless he joins. But that's basically all I wanted to cover on it. So hopefully that makes sense. Anybody got any questions on it? It may seem obvious to a lot of you, and I might have just been teaching you to suck eggs. But obviously there's some people out there that don't get what the market does. And I call it the market. You know, this guy is also a gold trader, which again, I told him, stop it. But you know, it's all about just understanding market structure. That's now broken a low. So where's it going to the upside? Well, lower than that bit, obviously, if it's going to do that. And if it's not going to do that, it's part of a pullback to here, which means it's going to do that. That's just obvious to me, because all price does is step up and down, or go sideways for a bit before it steps up or down. That's all it does. So it's really obvious when that low's been broken that it's going to make a new lower high if it's going to continue to do that. But if it's not going to continue to do that, this is what we're looking at. So therefore it's going here. Yeah. So but to me, it's obviously I've been doing it a long time, so I see this all the time, and to me that is the only thing that can happen. But you know, it's the thing he got. I think he got not so much didn't get his head around, but the thing that confused him was, how can I be so sure? And the answer was obviously, well, how can I not be sure? Because there is only two things that can happen. It either will or it won't go up and down. But you know, so but I think it comes from a understanding of market structure. So you know, every time you press a button, and go and do this in the strategy tester. Like I said, the Zone Trader EA is probably the best thing I've built as a tool for training people. Is to use this in the strategy tester, draw the boxes, and you will just see market structure playing out over and over again, and you will understand that every box you draw is just creating higher probability of the trade working. Not getting it wrong is not a problem. You are accumulating a position over a distance that price has used in the past to make money in the future. You are a speculator. You are a risk taker. That is the job. I think everybody that hasn't understood the concept of position trading, is still using stop losses, has trouble getting their head around the concept of what I do, because it's abnormal, isn't it? It's not what everybody is taught, because everybody's trying to make $1,000 a session and buy a Lamborghini, and it's just not the way that you make money long term in this industry. It just doesn't work that way. If it did, the banks would all be doing it, wouldn't they? They're not, because they can't control the price. They know it goes up and down. I'm busy working through your member sessions. In one of the sessions, you briefly discussed the risk on entering a trade as a percentage of risk over ADR versus money amount over one ADR. I can't remember in which session it was. Will you please explain it again? I think you mentioned, if I remember correctly, it's better to use money over one ADR. So with there's no real good or bad about it. With a percentage risk over ADR, what you're doing is you're risking a percentage of your account. So when you start, if I was risking 10%, let's look at the position trader EA because it's easier to do on that. So if I'm risking 0.2% over one ADR, What I'm saying is if I go long here and price gets down to there, I will be in 0.2% of drawdown. Now, when you're trading, that is a constant risk, yeah, applied to your balance. So as your balance goes up, the amount of money you risk goes up. As your money goes down, the amount of money you risk goes down. The problem with using a 0.2% or a 0.5% or whatever percent risk of your account is, if you start your account, and somebody fell foul of this last year, they started position trading at the very worst point where we had a couple of squeezes happen at the same time, which were big squeezes. Yeah. So what he was doing was risking a percentage of his account. I don't know what it was. I used to say it's 0.25%. And then basically the market pushed down and he started doing drawdown control, drawdown control, drawdown control. And what was happening was his balance was reducing. Yeah, because obviously he was making losses, he was taking losses, and his balance was reducing. So the next trade that he took at 0.25%, which was, let's say for ease, it was $250. The next trade he took down here at 0.25% was actually about $175 because his account balance had dropped. So now he's going to find it harder to recoup that because he's risking less. If you risk $100 over one ADR, every single time you take a trade, you are risking $100 over ADR, regardless of your balance. If your balance drops, your risk remains the same, which means it's easier to recoup the money. So it is better to use, ideally, that. However, I use a percentage risk because that's just the way I like to do it. And I also have extra capital I can put in to top it up, and I can adjust this. And it's just a case of, this is probably the safer way to do it, risking amount of money, for simplicity's sake. If you're not experienced, if you risk $100 per trade, or per distance in this case, as an initial trade, it's simple because your balance is removed from the equation. It doesn't matter. Yeah, so you don't even have to look at it. You're doing the same thing every time, which is consistent. The other good thing about using a monetary risk is when you do a back test, your back test is skewed. And this is real world. My account balance goes up and up and up, and I withdraw from it every usually quarter. So my balance drops every quarter roughly. But it doesn't always do that because I'm lucky enough to have capital that I can keep compounding an account, and then I do a big withdrawal from it. But if you use a fixed amount of risk and you start with 100K, for example, what will happen is your account will grow. That will not change. If you use a percentage risk and that 100 grand grows up to 125K, your risk increases. So that will go up to $125 for the trade. In the back tester, if you have a test which starts like this, yeah, and then does this and doesn't make a lot of money, the reason is usually because the risk here was 100, the risk here was 50. Therefore, it made it almost impossible for it to have a nice big equity curve. But look at it, it was a beautiful strategy and it worked great. It just had a losing run at the beginning of the test. If, however, you ran a test and it did this, yeah, and the losing run appears in the middle, it's had a chance to build the 100K account up to 150K, and now it's taking much bigger risk and making bigger losses. But when it starts to recoup that, it's actually sitting around 125K, so it can make faster gains. So in the back tester, when you're doing system parameter permutation testing and back testing, using a fixed amount of money per trade gives you a level playing field, regardless of the distribution of orders in wins and losses. If you have loads of losses and it takes your account balance from 100K to 10K, and then the system starts working and it absolutely kills it, you're only trading on a 10K account. So the results that you're seeing will generate a negative return because that 10K risk, risking $10 a trade instead of $100 a trade, is never going to get back to the original balance. Whereas if you're risking $100 a trade every time, regardless of what happens, first, it probably would have blown the account if that's what would have happened. But if it hadn't have blown the account, it would recoup the losses as fast as it lost them. So the speed of recovery, if you have a losing run, is more difficult with a percentage balance. However, if a system works well for a long period of time, the percentage balance will give you a higher return on investment. Yeah. So there's, again, it's one of those things, and you'll hear me say it all the time if you hang around. There is no right or wrong in anything in trading. There is different. These will give you different returns. Go and run a back test with a 0.2 risk, and then go and run a back test with, run a back test with a 0.2 risk over 1 ADR. Calculate roughly what that is in risk, monetary wise. Let's say it might be $100 or $50 or whatever. Then run the same test again with a $50 risk. Yeah. And you'd need to change, actually, you can keep that the same. If you're using these ones, these exit targets as percentage, you'd need to then change it to exit targets in money, so that it's relative to whichever one you're using. But exit ADR is what I use anyway. So run that test, and then run the test with a fixed amount of money, and you'll see the difference in the results. You're going to get very different results, and those results will be dependent on how the test started. If it started badly, the results won't be as good. If it started well, the results will probably be exponentially better. But you do not know at what point in the future you are going to get hit with a bad run or a squeeze in any strategy. A bad run in a stop loss based strategy of 10 to 20 losing trades in a row, it's going to happen. It will. Every system and strategy in the world has it. It will happen. And if it happens on day one, you're screwed. If it happens 2 years in, you're fine. But you cannot control the random distribution of trades winning and losing, positions winning and losing, squeezes happening, not happening, because you do not control the market. The random distribution of profit, loss, trades that are winners and losers is decided by the guys that make this thing go up and down in a binary manner. So always, if you can, backtesting, try and use the same thing. If you same lots, use lots. If you use a fixed lot of 1, you're taking exactly the same size every time. However, I'm not a fan of that because I use risk over average daily range. If you're using a fixed lot of 1 with a fixed stop loss of X pips or points, then yes, maybe you could. But the problem is the market will move a different amount of pips and points throughout the year because the average daily range of movement expands and contracts. So this is why I use ADR, and most institutions use ADR because you're looking at what is the average movement. I want to risk the amount of money that I'm going to risk over what on average this moves. If something moves like this and something moves like this, you cannot apply the same risk to it. If you put a 10 pip stop on that, you might survive for a week. If you put a 10 pip stop on that, you'll survive for a minute. Yeah. So you've got to use the average daily range, which is why it's, you never see me trade anything without ADR because it's the only thing that you can use to measure market movement. So if you're risking over ADR, your risk is always dynamic to what the market is doing at the time, which means that strategies, if they survive a robustness test and a long-term back test, it means that adapting to the market conditions is favorable for the strategy. Yeah. If you don't use ADR and use a fixed stop loss, you'll find that virtually every system parameter permutation test you do will fail because the market will adapt and change. Your system and your strategy won't adapt and change. If you don't adapt and change, you die. That's it. This thing changes all the time. Look at the stock indices. Hard work today, isn't it? This FTSE. Yeah, so look at this, the stock indices. Look at what happens on the Dow. Look at the Dow today. This is pre-market. Yeah. I've got this 2-hour timer on my lights and I can't figure out how to turn it off. There's a 2-hour button on the controller. If I press it, it does nothing. But now it's put it on a 2-hour timer. But I can't work out how to turn the 2-hour timer off. Anyway, must be 9:15, yeah, because they turned on at 7:15. So automatically, clever, isn't it? So yeah, look at this thing and how it's changed the average daily range. So, here we were moving that much every day. Yeah. down to there. And going into earnings fortnight, we're moving that much in a day. Yeah. The ADR is very different here. We're getting bigger days put in. Look at yesterday. I mean, yesterday was to do with the NASDAQ. But you're going to go through periods where the market is going to go into balance. Yeah. Into accumulation. Because there is no reason for particularly the stocks in the Dow to be bought or sold. So we're happy trading at these prices. So when you're happy trading at these prices, you need to adjust to work within these price ranges. When price moves aggressively in earnings fortnight, you need to adjust to what is happening in the market here. And for stocks, there's an argument for using a lower ADR because stocks are more reactive and move faster. With forex, very little changes. Yeah. So if you're using an ADR 30 or 60 for your spacing with RSI mean reversion, for example, you're going to get a really good average because you get periods where it goes, it moves further, but in between there's these bits which average it out. Then you get a big day and a big day and a big day. But if you take an average of all of that, you'll get a rough idea for what it does the vast majority of the time. And like I say, there's nothing exact in this industry. Everything is rough. It's random. Yes, it will move much bigger for 4 days on the trot, and you will be taking ADR reversals and getting killed in every one of them. But that is something that happens every now and again. 80% of the time, it will move normally above ADR and do market structure pullbacks like this. And now that's reversing. Yeah. Why is it reversing? Because that's where it reversed last time. Yeah. Where's it going to bounce? There. Why? Because that's where it bounced last time. Yeah. It will bounce, but it might drop and it might bounce up there. I don't know what it's going to do, but I do know that when it gets there, one or two things will happen. Binary. Yeah. But if you're risking your money over ADR, you're always going to have a level playing field. Yeah. Whether it's a percentage or a fixed amount of money is entirely up to you. But with me, if my account balance is dropping because of multiple squeezes like it did last year for a period, I put my risk up so that I know that when squeezes finish, that's it. You don't get squeezed. Nothing squeezes permanently. If you think about what a squeeze is, I'm just trying to find a good squeeze on the hourly. Pound, maybe. Just looking for something that hasn't pulled back. I mean, this is the thing. A parabolic squeeze is kind of, I mean, US dollar yen last year is an obvious example. So, in a parabolic squeeze like this, after the squeeze is finished, it doesn't squeeze again. It goes, holy crap, and it returns to the norm. So the ADR resets, which gives you an opportunity here for normal price action to make back the money on the squeeze. Yeah. So you've always got to use ADR because it just tells you what you should be doing roughly. These things, you're never going to know they're coming and you're never going to be able to deal with them. Every trader on the planet here was longing this. Why? Because in the past, whenever it's done that, it does that. Because everybody's on the bandwagon of market structure now because ICT thought he invented it. So now it's everybody trades market structure. They're not trading market structure. They're trading ICT and it doesn't work. Yeah. But the concepts are similar, aren't they? But ADR is king. So risking a fixed amount of money and a percentage risk. One is a variable, one is not. That's it. So back testing and in live trading if you want to, but this is kind of the advanced bit, if you like. But there's not a massive amount of difference. So use what you like, basically. But I am always encouraging people to test, to go and back test everything themselves. Yeah, don't take what I say as red, go and test it yourself. Go and see what happens. And if you don't understand why it happens, ask, and I can tell you why it happens. But it's you know, go and test it yourself, experience it yourself. The people that dive into this, the people we've had, you know, there's a couple of people recently on the position trading. You know, they've said they've had an absolute nightmare, blown accounts and lost loads of money and stuff. And when you look at what they're doing, they're just sticking the EA on the chart. They're not understanding what it's doing. They're not understanding why it's doing what it's doing. And they haven't really got a clue as to what to expect because they haven't done the testing. They've seen a chart, they've seen a back test, they've trusted it, they've put it on there, and they haven't looked at the worst case scenarios. If you look at the worst case scenarios over time, over history, and you put your parameters within the worst case scenarios, you're going to survive. Unless there's something catastrophic like COVID hits, you're not going to survive. No one does. That's why they call them crashes. That's why people jumped out of buildings in the 1920s in New York, yeah? You can't survive those things, yeah? Not jumping out of buildings, I mean, but market crashes where something goes like this. An intervention of that strength has never been seen before, ever. Yesterday on the NASDAQ, the Nvidia stocks, yeah, that is the fastest, worst stock crash of a individual stock instrument in history, and it happened yesterday. There has never been a stock had that much wiped off its bottom line in 24 hours, ever. But what's happening today? It's nearly done a 50% retracement on it. I longed that yesterday on my Top Step account and made 1200, yeah, but only because I managed risk and I identified something that was not right, something not normal. But that equally could have gone another 200% of ADR, couldn't it? Yeah, if you were longing it here in a strategy that said let's go long and close out at end of day, really sorry for you. Yeah, but it is a strategy, and some banks and institutions also use it. Do you think yesterday they were getting hurt? Damn right they were. What do you think they're doing today? Buying the crap out of Nvidia to get the price back up again so they can get back most of their losses, because they can, we can't. Yeah, so you just have to work within parameters. Yeah, you're going to get days where it goes bonkers. Yeah, but after it's gone bonkers, it will go back to normal, and that's what we work with. It's the 80-20. What's the guy that made the 80-20 rule called? I can't remember what his name is. Pareto. That's it. The Pareto principle. So it's the old, you know, it works in business, it works in life, it works in everything. Yeah. So 80% of your sales come from 20% of your customers. 80% of your sales come from 20% of your products. 80% of our trading profit comes from 20% of the moves. Yeah, all that sort of stuff. It's just this works absolutely everywhere. Relationships, health, exercise. 80% of your trading may be at an easy pace with 20% going hard, which is called HIT. Yeah, it's everywhere. 80% of 20% of bugs cause 80% of errors. Don't we know about that one? So yeah, it's that principle you just have to abide by, which works absolutely everywhere. But you know, this is what these statistics are on ADR. Yeah, 42% of the time the market spends within its average daily range. It exceeds that 42% of the time, but when it does, it only goes beyond that level 23% of the time. So we're just trying to create edges in the market. But if you use the same amount of risk on every single trade, you will get the same result. If you use a percentage risk, you will get a different result based on your balance, and that could be either way. So there you go. Right. We're not moving today, are we? So yeah, basically today we've got nothing else on apart from consumer confidence at 3. So we'll see what happens with that. Overnight we've got Aussie CPI. So that's it. That's the end of that session, really. So anybody got any other questions they want to discuss? Anything else? Let me know. Or forever hold your peace. Hopefully you're all still awake. So that was only an hour. That wasn't too bad, was it? 45 minutes. I haven't got the new opening range breakout version 2 done yet. I've got absolutely no further forward with it than the testing that I did last week, because I've got so much other stuff on at the moment, including trading. So obviously I will try and do that on Thursday. I'm going to try and spend tomorrow getting that done. I'm at the moment revamping the website to make it more user-friendly and more educational. So I'm recording videos to explain the strategies and things and everything in much more detail for every single product at the moment that I've got. So I'm just recording videos at the minute, trying to get those banged out today. And as soon as I've got this page done, I can then focus on the new version of the strategy of the ORB. So hopefully on Thursday we'll have some of that to do. But if not, I will put something else in and we'll look at something else. But if you've got any questions or if there's anything you want covered, obviously do let me know, and I'm happy to do a session on anything, basically, and try and you know, I'm all about trying to get the content right, really, for you guys, because you're the guys that are supporting the streams, so you get what you want at the end of the day. And if you don't know what you want, I'll tell you what I think you need, and hopefully we'll get somewhere. But yeah, but anyway, if you haven't got the Zone Trader EA, don't have to buy it. Just go and download the demo, because the demo works in the strategy tester, and just use it in the strategy tester and play with it. Yeah, and get used to the binary aspect of the market. Yeah, so get used to the fact that it only goes up and down, and prove to yourself that you can see where it's going. Yeah, one good little tip with this is, which is really good, is to just zoom out. Yeah, stay out in the bigger picture. Look at the bigger picture and longer term moves. Yeah, just don't go in too close. Don't go in low time frame, H1, H4, and look at the bigger picture and what price is doing and how it's moving and how the structure's working. And just you can see what it's doing. Yeah, outside bar, expanding wedge pattern. But the more you see this happening yourself, the easier it is to just go that or that. That's what I want everybody to sort of try and get to, if you're not already there. Yeah, if you're really good at support resistance, that's all you need. It's all you need. You just need to drop the risk, remove the stop, and let the market move, because that's what it does. It's too simple. Everybody's trying to make it too complicated. Right, I'll leave it there. Anything you need, let me know. I'll be in Discord back on Thursday for the next stream, which will be to be decided. Unless you've got something you want to discuss, then obviously chuck it out there and I'll do it. Back tomorrow afternoon, trading New York session tomorrow afternoon. I'm going to do indices. I'm going to do some futures as well. And if you're in the ORBs or the SIH today, we'll see where we go. But at the minute, it's not looking particularly healthy for the DAX. We can't make a decision today, but FTSE looks like it's possibly going to get there. So we're struggling here. So there's absolute clear air there. Look, there's nothing to stop us. Maybe that, which is where TP1 is. But if we do break this today, there's that's ADR. Look, we got absolutely miles. We can hit that today, no problem. So there's a good opportunity on the FTSE today to try and get that those two hit, but struggling in it. Everything's struggling today. Yesterday scared the crap out of the market. I don't like it when the videos and people collapse. So we will see. All right. So have a good day. Anything you need, let me know. Other than that, I will see you next stream. Have a good one.